Hey everyone, welcome back to the channel. If you've followed my journey here, you know I've been bullish on Palantir Technologies for a while now. I've made several videos over the years, tracking this company through its ups and downs. And while my long-term conviction hasn't wavered, I'll admit, I'm a bit perplexed by some of the short-term movements we've seen lately, especially last Friday's sharp drop of over 9%. So in today's video, we're going to unpack what's really going on with PLTR stock right now, what might be driving this volatility, and whether or not this should be seen as a red flag or a potential buying opportunity. Let's begin with what actually happened. On Friday, June 27th, Palantir closed at $130.74, down nearly 10% in a single day. This wasn't some random blip, it came on the back of unusually high volume, over 200 million shares traded hands, and what makes it all the more intriguing is that this decline happened on a day when the broader markets were up. The S&P 500 and the Nasdaq were both pushing to new all-time highs, yet Palantir bucked the trend and headed in the opposite direction. Now, it would be easy to chalk this up to simple profit-taking. After all, Palantir has had a tremendous run over the past year. The stock has surged more than 400% since mid-2024, and for many early holders, this recent peak offered a logical moment to lock in gains. But if you dig deeper, there's more at play than just people cashing out. One of the biggest contributors to Friday's drop was fresh concern over future defense spending. Reports came out suggesting that the US Department of Defense is projecting a smaller budget for 2026 than initially anticipated. Now, for most companies that wouldn't be a major story, but for Palantir, which draws a significant chunk of its revenue from government and defense contracts, that's a potential headwind. Add to that the fact that geopolitical tensions, particularly in Eastern Europe and the Middle East, have recently shown signs of de-escalation, and the perceived urgency for Palantir's government-focused AI solutions may have cooled off in the eyes of some investors. But that's just one part of the picture. The insider selling narrative has also weighed heavily on sentiment. Since the start of 2024, CEO Alex Karp has sold nearly $2 billion worth of shares. Other executives, including COO Shyam Sankar, have also unloaded hundreds of thousands of shares just this month. Now, to be fair, a lot of this selling has been through prearranged trading plans, so-called 10b5-1 plans. But when executives sell at this kind of volume during a period of massive stock appreciation, it naturally raises questions. Do they believe the stock has peaked? Do they see limited upside in the near term? These are fair questions for any investor to ask. Whether or not these sales are justified is up for debate, but there's no doubt the optics aren't great. Another factor that might have caught some people off guard is Palantir's recent inclusion in the Russell 1000 index. At face value, this is a bullish development. It means greater visibility, potential inflows from institutional investors, and a stamp of legitimacy. But the process of being added to a major index also triggers large-scale portfolio rebalancing. Index funds and ETFs that track the Russell 1000 have to buy Palantir shares, while others may be trimming their positions to keep balanced exposure. This can create short-term volatility and even distort price action temporarily. So while being added to the index is good in the long run, the actual rebalancing process can result in odd price moves in the short term, exactly what we saw on Friday. Then there's the elephant in the room: valuation. Palantir is no longer the underdog it once was. At its recent highs, the company was trading at a price-to-earnings ratio that dwarfs most of its competitors in the software and AI space. And while the company has posted solid earnings growth, not everyone is convinced it can maintain this momentum. Some analysts are even going so far as to project the stock falling back to the $50 to $60 range within the next couple of years, assuming its growth begins to decelerate. I'm not saying I agree with that prediction, but the fact that it's out there adds a layer of skepticism that's now baked into the market. And here's where things get even more complicated. Palantir's commercial business has actually been gaining real traction. They've struck partnerships with major corporations across industries, from healthcare to logistics to energy. Their artificial intelligence platform, or AIP, is becoming a legitimate differentiator in the enterprise AI space. And let's not forget their recent foray into the energy sector, including a nuclear energy collaboration that could be a game-changer in how we model power demand in real time. These aren't just hype headlines, they reflect serious innovation and product adoption. So why, despite all this progress, are we seeing a steep pullback? Honestly, it might be a classic case of the market getting ahead of itself. When a stock runs up several 100% in less than a year, expectations balloon. The market starts pricing imperfection, flawless earnings, continued contract wins, uninterrupted momentum. But the reality is no company operates in a vacuum. Macro conditions shift. Budgets change. Executives sell stock. And even the best companies can't escape periods of consolidation. Now, from where I stand as a long-term investor, none of this changes my fundamental thesis on Palantir. I still believe the company is uniquely positioned at the intersection of AI, defense, and enterprise analytics. Their tech isn't just hype, it's proven, it's scalable, and it's already being used by some of the most important institutions in the world. That doesn't mean the stock is going to shoot straight up every month. But if your timeline is measured in years, not days or weeks, I still believe Palantir offers asymmetric upside. One thing I've learned in my time holding this stock is that Palantir is not for the faint of heart. It attracts attention. It attracts criticism. And it certainly attracts volatility. But it also attracts visionaries, risk-tolerant capital, and some of the brightest minds in AI and defense. That combination is rare. So as we wrap this up, here's my takeaway. Friday's drop may have spooked some traders, but for investors who understand the business, it looks more like noise than signal. If anything, these short-term swings are a reminder of just how volatile high-growth, high-expectation stocks can be, especially when they become household names. Stay grounded. Stick to your convictions. And if you're going to be in this name, be prepared for the ride. Thanks again for tuning in. If this video gave you a clearer view of what's happening with Palantir, don't forget to like, subscribe, and leave a comment. I'd love to hear your thoughts. Are you buying the dip, trimming your position, or just holding through it? Let's keep the conversation going.